Hi, this is Richard Pearce with Finextra TV, and joined today by Brett King, and he's the author of Bank 4.0 and also broadcaster extraordinaire, futurist, and delighted to have you with us here today.
You know the definition of a futurist?
Give it to me.
Never being wrong today.
Well, perfect, isn't it, really? Yeah. In the land of the blind, the one-eyed man is king is another one that I quite like.
Yes.
Listen, we're here to talk a little bit today about sustainable finance. What does it mean to Brett King?
Well, there's a number of different aspects of it. You could take the institutional side of it, which is, are we supporting sustainable organisations? As we push for digital transformation, for example, one of the big concerns is data centres and their footprint, in terms of energy and fossil fuel, carbon footprint, and that sort of stuff. So there's those elements to it. There's the policy side of things. Are we supporting organisations that are sustainable and healthful in terms of society? I guess that sort of covers a bit.
There's some pretty broad
and then there's the consumer element.
Yeah. And so, looking at it in terms of one aspect of it, the institutional side, where you've got all this capital locked up under assets under management, and it's struggling to find its way down to those downstream projects. And this is where we use the term ESG. And people talk about data and the quality of the data. Do you have a view on ESG generally and where it's going and the role of data?
So if we take the role of the environment in this piece, obviously right now we're right in the moment where the climate change awareness is increasing. But there's a very strong argument to be made that as we shift towards more of an ESG type footprint, we will have to view the world in a longer term view in terms of problem solving and solution setting, particularly when it comes to climate change. But the market and economics right now is geared very much towards quarterly results. So when we talk about AUM, we talk about CAGR and Sharpe's ratio, alpha, beta, and all that sort of stuff. These mechanisms we have for measuring the performance of a portfolio. And that, it appears, is actually part of the problem.
Yeah.
That quarterly view, that annual results view, we're looking for those returns. That pushes us to make economic decisions that are detrimental to society at large.
Yeah.
And so ESG is trying to balance this stuff out. But ultimately, this is a problem of philosophy and ideology at a society level.
Yeah.
And so if you sort of unpack it and say, why do we have a problem dealing with climate change? Why is it such a struggle to get policy and action around this when we can see the effect it's having on the environment? And part of that is sort of, we've learned over the last couple of hundred years with economics that you have winners and losers. And the winners get the financial gains and the losers don't. And so there's this, it's almost like life is an Olympic sport today, right?
Yeah.
And so it's almost as if we need to reframe the collective goal of society. What should it be? And it shouldn't necessarily be to create wealth and affluence. It should be to create sustainable prosperity.
Absolutely. But do you think, in the sort of light of a sort of climate change crisis that we're constantly being told about, that we can go through that debate, which is a very complex one? And I wonder whether if we perhaps do that at one level, but at another level we look at some sort of much more tactical activities. So we say, okay, ESG today is a way that we measure the definition of movement of capital from, let's say, the brown economy to the green economy. And that data, there's a trust issue sometimes related to it because a lot of it's self-reporting. And when I think about the work that you do around consumers and personalization and behavioral analytics and so forth, do you see a world where you can sort of start to get the consumer involved in nudging and promoting things such that the right products are consumed, which pulls this through, if you will?
Look, I think there is a role for this positive feedback loop in business and in policy setting. And I think, but then again, consumers are part of the problem. We as consumers are part of the problem. We don't hold these corporate organizations, these, institutional investors, we don't hold their feet to the fire on stuff like climate change. If we're getting our returns in our portfolio, we tend to be happy. So maybe there's a bit of a moral, ethical role that consumers should be more vocal about this.
Yeah.
They should be forcing more of this to happen. And I think we're seeing the awareness side of things, but that hasn't necessarily translated into policy yet. ESG is emerging, I think, as this mechanism to take that growing awareness from consumers and try and say, we're listening to you, we're acting upon this. But I in the short-term goals you're talking about, stuff like carbon footprint, it's almost as like, if you look at the Middle East, I was there for a number of years, 5 years in Dubai, and we had the Islamic finance stuff. And so they do this, portfolio investments based on a set of beliefs. So they don't support gambling and alcohol and these sort of industries. So I think there is a moral, ethical play to the ESG where we say, all right, well, we take consumers' concerns. We won't invest in fossil fuels. We won't invest in organisations with a large corporate footprint. And I think the more that becomes popularised, the more meat that has to it, the more that ESG can actually do some real good.
I think that's true. I also quite like, I know you talk a lot about Ant Financial and Alipay, etc. And I think it's quite interesting. I don't know if you can expand on the work that they do around saying, look, you can go down the branch, if you will, to onboard, or you can do it on the mobile app, but actually there's a difference in your sort of CO2 footprint, and we will virtualize that into a virtual tree. This whole ant forest thing. Are you aware of that?
The UN has just awarded them this week as a result of their sustainability initiative there, the ant forest they've done. So basically they're saying, we are going to make sure that we're carbon responsible. Our footprint in terms of data centers and so forth, if we can't make those immediately sustainable from a clean energy perspective, we will plant forests and so forth so that we're carbon neutral as an organisation. I think Amazon is going down this route. Google has already gone down this route. Apple with the spaceship, their new campus in Cupertino, all solar panels on the roof. And so we look at this and we go, boy, these guys are really doing some positive things. But to be honest, the push towards this green stuff, it makes sense from a consumer perspective. But we're also seeing, particularly with solar, that it makes a huge amount of economic sense now, right? Yeah. Because the reality is, if you can do solar right, you can do it far cheaper than it costs you to buy electricity off the grid from a coal generation basis today. There was news 2 weeks ago of a utility in Australia, Northern Territory, that was a load balancing generator. So they would have these natural gas turbines that would kick in when the load exceeded that of the coal-based plants. And that's gone out of business because the cost of solar now is so cheap that to deploy a solar plant to replace their capacity was cheaper than just the fuel they would need to burn to create the same electrical output. Yeah. So it's pretty clear now, solar is the cheapest form of energy at scale. Tidal is probably a little cheaper, but it can't scale as easily, and wind and so forth. So we've reached the tipping point.
Yeah. So it's this point, isn't it, really, of finally, I think, we look at the capital, there's something like $90 trillion of assets under management, which is pledged that they want to actually be ESG kind of savvy, if you will, and start to flow the capital to projects like wind and solar. Some of the skepticism in the market is around, can I trust that the money that I put in my pension fund ends up into a solution with an outcome? Right. That data quality, how are we going to, last thought, how are we going to make sure that data quality is really kind of one that people can trust?
So I do think we need more transparency. So I would like to see ESG players in this space have a dashboard, allow you to drill down on it, on a results page or something, and see exactly what's happening in real time in terms of the returns for the various investments they're making, and the portfolio companies they're doing, and what they're doing, in terms of the ESG principles, right?
Fantastic. I think you're right, and thanks so much for sharing your thoughts with us. I think it's one we'll expand on a bit further.
You're very welcome.
Thanks a lot, Brad.